Hey guys, and welcome to this video. So in today's video we're discussing the long-awaited Toronto real estate statistics. I really don't think these are as important as a lot of people think. These statistics, I really am looking more at the suburbs, more at certain cities and certain sectors of the housing market to distinguish what is happening with this bubble and the condition and phase that we're in the cycle with this bubble. You have to look at the weakest market though, the strongest market, this one, and also a market which is just so out of whack, so just screwed up that there is no other explaining of it than that it is a bubble, and that is Windsor. And we're waiting for Windsor's statistics, Windsor Essex County statistics to come out, and then I'm going to do a video on it. So without further ado, guys, let's talk about these Toronto real estate statistics and what they mean, because it's a little bit strange, I got to admit. Let's go. Okay guys, so it is a little bit strange, these statistics, I have to admit, because they don't really make a lot of sense, and we'll get into them and then it will make more sense to you. So sales did drop month over month. They dropped from 11,106 to 9,390. Now on their overview thing, they don't actually show you that. They like to pick and choose depending on what looks better on their little blurb here. Like what looks the most bullish? What's the most bullish case for the housing market? They use those stats. So when you look at it on here, well, they've got residential transactions year over year, but you'll notice they don't use year over year for everything. Some things they use month over month. It's whatever just looks the most bullish. If they use month over month, it would be the easiest to see the condition of the housing market, but they don't want you to do that. And they do release reports that look like this. They're multi-pages, and I analyze these reports, and you have to go through month by month to compare the condition of the housing market. I mean, it is just ridiculous to compare the market of this year to this time last year, because they were totally different circumstances. People were totally in different mindsets. Inflation was not even a problem then. Deflation was actually a problem. And we were just leading into the inflationary period that we're now in. So let's talk about it. Okay, so as I said, 15.5% drop in sales. So the market is slowing, although the slowing speed is not that high. Like Calgary was nearly 28%. This is 15.5, that's nearly half. We've got new listings that are also down 29%. So new listings are down also. So that's not good either, because that's putting more pressure on. But the interesting thing with all this, and this is month over month, I do everything month over month, because we're talking about the housing market and what I just said about why not using year over year statistics is a good idea. Price is down 2.5% month on month. Now that is pretty surprising to me, because as far as I can see, the market's still tight. And so the other thing is the listing days. The listing days have gone up also 15%. So that market is definitely slowing down. And even though there's been a drop in new listings, prices are slipping. That kind of is telling you something right there about the market condition, that you've got basically, I think of it in stock charts, and you might think I'm just a moron for doing this, but not really when you really think about it, because everything operates in cycles. Stocks are the same thing. They're very cyclical. And the thing with stocks is it's a supply and demand based market. You have investors, you have retail investors, you have buyers and sellers, and they are what dictate the price. The only thing with real estate, people don't like to compare it to stocks because it's people's homes, but it is a market. It's a market like any other market. And when it's a market, you've got that supply and demand pull, and whichever way is going on the price. So what it's basically meaning is people are bidding lower. So I think that's probably a sign of the stress test maybe having an impact there a little bit on what people can afford, which just goes to show how people are stretching it. They are stretching it massively, and it will be interesting to see how that takes effect, because August is actually the last month that is grandfathered of this stress test. So most lenders are allowing people who got a pre-approval before the stress test took effect to then grandfather that for 90 days. So if they decide to exercise on it, they don't have to do that new stress test. A lot of people would have held off for the reason they wanted to see what happened, whether it had any effect. We of course know that it's barely had any effect. Like, the stress test is just a joke. Everything that the government has done is just a joke. But to be honest, I also know why the government isn't intervening as well, and people won't believe this. People think that the government has their back and the government is inflating the housing market. No. They're not doing anything. They're kind of just leaving it to their own devices. Yeah, they've done their stress test a little bit, but that was only really because the OFSI was on their back about it. But the key thing is here that the Bank of Canada was buying mortgage-backed securities. And when they're buying mortgage-backed securities, that means that lenders are going to be pumping out loans like there's no tomorrow, because they know that, hey, the Bank of Canada is buying those mortgage bonds, so they don't have to worry. And that's what quantitative easing does to the system. It fucks it up, it screws it up. And the other thing is, the Bank of Canada said themselves that the mortgage quality is deteriorating. LTVs are just going higher and higher. People are more and more stretched. And as the Equifax report that just came out suggests, the credit that Canadians have is still shitty, and it's barely recovered since the bottom of the pandemic. So what does that tell you? It tells you that people's financial situations are just not that great. So what do I think of all these the statistics there? Well, it's kind of expected, to be honest. I didn't expect anything blowout. Let me know if you want me to do one on the Vancouver housing market as well. I'm going to be covering, obviously, Toronto every month, and I'm going to be covering Calgary every month, and I'm going to be covering Windsor every month. And I may throw in somewhere from Vancouver Island as well, because that's another place, or the Central Okanagan region in BC, because you need to have some balance. You need to have the hottest market, the weakest market with the weakest economy, which is Calgary. It's not just because I live in Calgary that I report on that market. It's because it's the weakest in the country, highest unemployment, worst financial circumstances, as the mortgage deferrals prove to us. So we know from those mortgage deferrals, and yes, most of them are paying them back now, so it's nothing to worry about. But the thing is, the economy is still really on rocky ground. And the thing is, guys, you have to realize that when the mortgage deferrals happen, that gave you an insight into how people are on the edge, how many people are just so over leveraged. The use of these mortgage deferrals was massive, and we are not out of this yet. We are going to go into a recession. It is inevitable. The government is trying to pump and continue pumping it as much as they can, and they are spurring inflation up massively with all of this. And, you know, you've got, like, I mean, guys, this is 2021, and I just want to say this. And here's the July report, and they even put it on their Market Watch report, their 20-pager, right on the front page, that the unemployment rate is up month over month, 0.5%. Well, that's quite substantial. It's at 9.6%. The labour market is not recovered. It's still on stimulus from the government. The Bank of Canada is having to rein in its quantitative easing program because of the inflation, because of the psychology in the market. You have to realize at some point that there will be a turning in all this. We will enter a recession. And the thing is, we were actually sliding into a recession anyway right before the pandemic, which is kind of odd, isn't it? Everywhere was calling it in 2019 at the end of the year. GDP was real slowing down, as were retail sales and other things, economic indicators of what's coming. Just like we're seeing now, we're seeing inflation going up and we're seeing retail sales and stuff like that going down. That is not good, because that means that stagflation is right here. We have a slowing economy and we have rising inflation. That is stagflation. We saw everywhere that sales were going to continue to just be blistering throughout the whole of 2021. And so far, they're already putting on the brakes, and we're not even through summer yet, where typically it's slowing down in September. Well, we're already slowing down, and it's just coming into August now. And it's slowing down a lot. But anyway, guys, if you enjoyed this video, please hit that like button. I really appreciate it. We're going to be doing more videos. We're going to be doing Windsor, like I said, Vancouver maybe. If you want it, just let me know what you guys want to see in the comments. There's so many videos that I want to do, and there's just not enough time to do this. Like we need to do a video on gold and silver as well. I need to do a video on gold and silver for you guys. But anyway, guys, I will see you in the next video. I am out. Peace and love. Bye-bye.